The FTSE 100 end of day analysis for Monday, the 30th of March 2015. Okay, so what a stellar move higher overnight, given the fact that the Shanghai market was up quite substantially, followed by the Nikkei, as you can see, up almost 2.5%. The Hang Seng obviously up quite substantially as well, and obviously the Nikkei, as you can see, up by 0.6%. So very, very impressive moves overnight. That obviously triggered off a risk on trade, given the fact that the Asian markets are leading everything higher. Concerns over Yemen obviously cast aside. Concerns over Greece certainly cast aside. So the two wildcards that I explained. Now, the risk on certainly fed through to the European markets, but failed to translate into the FTSE 100. As you can see, we did eventually end up towards the 6891 region. That's where we closed, according to this Reuters feed. But the European markets certainly up quite substantially, even with Greece remaining an uncertainty, which is quite strange. Yes, we can say and attribute the actual rally to the Asian markets being higher quite substantially, but. And also one could say that the euro was down as well, but the euro was down due to uncertainty over Greece. So a move down on the euro, it's a conundrum. Okay, I'm yet still to obviously pinpoint what the rally in Europe was. Was it just a QE led rally, a QE bounce, knowing that the obviously central bank has got your back, and Mr. Draghi is going to continue to print, therefore buy the dip. Okay, that may certainly be the reason. If that was the case, it certainly didn't feed through into the FTSE 100, as you can see here, finishing around the 6891. Okay, the economic data that came out today out of Europe, nothing really substantial or market moving. We had consumer confidence coming in line in terms of Europe, business climate slightly better than expected, economic sentiment indicator slightly better, industrial confidence slightly better, services sentiment slightly better. So overall, I mean, some decent data, but nothing. It's not really a real major market mover, other than the actual consumer confidence, which came in line, and that was a medium, obviously, impact. So overall, given the fact that we have Yemen in the background and bombing ongoing and shelling on the border of Saudi Arabia, we have the uncertainty there. Okay, and also given the fact that we have the uncertainty regarding the Greece situation, which at the moment, with the tweets that are coming out, still remain uncertain. So overall, it's still a risk-off scenario. I mean, we had the German CPI data coming in line as well, so no real deflation type scenario there. So that's obviously euro supportive. So strange, okay? Strange from the European market's perspective. I still can't pinpoint the move as to why Europe is up quite substantially. Obviously, given the fact that the FTSE failed to rally. Then we had concerns from the US as well, because the economic data that came out was slightly strange. Obviously, savings rate or personal income are higher than expected, but the PCE was a real concern from our perspective, and also spending. Personal spending came out half or 0.1%. Expected was 0.2%. Although pending home sales will come out slightly better, and the Dallas manufacturing business index came out worse than expected. So overall, the main obviously focus was on the PCE out of the US, and that came in slightly higher than expected. Therefore, that should indicate a stronger dollar. And that's exactly what we've been seeing. So the dollar strengthening. So you've had the Aussie get absolutely slaughtered today. So therefore, that's the reason why the FTSE obviously was certainly weak, given the dollar rally, which has been quite substantial. So if we bring up the chart of the yen, as you can see as well, that was up slightly as well today. Let's just bring up the dollar chart if I can locate this correctly. Okay, I don't think I have this in here. I've adjusted everything in terms of my it's not a problem, I'll bring it up. Okay, so 1 second. Okay. Okay, here we go. So If you look at the daily chart of the dollar, or even if I bring up a 60-minute chart, you can see the gap higher, gap and go realistically. So overall, obviously concerns over Yemen, etc., given the fact that we also had the situation or the scenario with regards to Greece, so that obviously supports a stronger dollar. Adding the fact that the PCE number that came out slightly better than expected. Again, that's the gauge for the Federal Reserve, so that alone indicates stronger, obviously, rates, or argument for stronger rates. Given the fact that Mr. Bernanke was also putting forth the argument today with regards to rates, so again, it's a conundrum, okay, real conundrum at present. A real conundrum at present. Okay, so just looking at the important figure that Mr. Leidy tweeted out. This is quite important. The US core PCE index 1.4% versus expected 1.3%, and that's the Fed's inflation measure. Okay, and spending versus was 0.1%, expected 0.2%. So on the one hand, you've got spending declining, and spending, as we all know, is 70 to 80% of the GDP, or contributes towards 70 to 80% sale GDP. Okay, so that certainly doesn't bode well going forward. And adding the fact that you've got the gauge that measures or is the barometer for raising rates, and that's going higher, i.e. the core CPI or core PCE index going higher. So on the one hand, you've got weaker growth going forward, on the other hand, you've got interest rates going higher. That certainly isn't a good concoction. So therefore, a risk-off scenario. Okay, so given the fact that we've factored in all the bullish news from Shanghai, the Hang Seng and the Nikkei overnight, therefore one will conclude then the bullish scenario is certainly baked into the cake, and therefore one would argue for a risk-off trade in the opposite direction. That's basically what I would conclude from that. Okay, right. So looking at the technicals now that we've discussed the fundamentals, so let's start with the FTSE, or alternatively, let's start with the actual volatility index. That's what I would like to start off with. Now, the volatility index is presenting a very interesting scenario because it's on the verge of breaking out to the upper level. Now, that's one other index that I need to just bring up as well. Like I said, I have adjusted my charts, so that's something that I just need to bring up. FTSE volatility. There we go. Okay, so this is presenting an interesting situation. Okay, right, so if I just switch to the daily chart, okay, so this is on the verge of a breakout. So obviously, as you can see here, we've had lower lows, lower highs, no more lower lows. We built a base, and we're on the verge of breaking out of this symmetrical wedge pattern, okay, or a contracting wedge, okay, or downward sloping wedge, call it what you want, or descending triangle, etc. It's basically on the verge of a breakout. This breaks out north, given the fact that the dollar index obviously has started to appreciate quite substantially, then you can have a risk-off scenario very quickly, given the fact that you've got uncertainty over Greece and Yemen, etc., etc., etc. Okay, so that's the situation that we find ourselves in there from that perspective. Okay, especially given the fact that the Aussie and the Kiwi have been down. Well, I've certainly found immense pressure today from the actual. Even though we had the Asian markets higher overnight, the Aussie certainly has been quite bearish, as you can see here. This moved lower quite substantially. So looking at a 60-minute chart there, we bring up a 4-hour, as you can see, it's just been constantly going lower. So it certainly doesn't bode well. Adding the fact that oil price as well, the oil price, certainly Brent, has slightly bounced towards the latter half, but it has been under pressure. Copper as well, and crude oil as well. Okay, so certainly all under pressure at this very moment in time, still in the $48 region. So that doesn't bode well. Even with Yemen in the background, that doesn't exactly bode well or bullish for the FTSE 100 going forward. Okay, so just looking at it from an intermarket analysis perspective as well, the Dow transports are very important. So you're into previous support equals resistance. Therefore, the dead cat bounce from the 200 MA is now over. Therefore, if the transports are into resistance, then obviously the FTSE will be into resistance as well. I can bring up the Dow as well. That was a Dow transportation. Bringing up the Dow 30. Bear with me. No, don't tell me that's not in my list as well. Do excuse me on this occasion. I've had a revamp of all my variables, so I need to add that in. Okay, so just putting forth the argument, if the Dow is into resistance, that means the FTSE obviously will be into resistance and vice versa. So given the fact that they all move in tandem using intermarket analysis. Okay, so let me just save this template. Save so I don't get this problem again. Okie dokie. So the inverted head and shoulders, as you already know, I highlighted that over the weekend video analysis, that the US markets were obviously set to move higher. So obviously we've had this thrust higher now. The important factor will be this candle here, red candle. This is certainly in control. Obviously if you take that candle out, then the next level to watch, just connecting the pivot highs, okay, will be the 18,100 level, obviously if the market continues. But from my perspective, given the Yemen situation still in the background, given the uncertainty over Greece as well, and given the horizontal resistance that we have, we certainly are into a bearish scenario, okay, given the fact that it's lower highs and lower lows for now, okay, even though we've held this key pivotal trend line. Okay, so bias certainly remains bearish from this situation, especially given the fact that the fundamentals that I described at the outset remain bearish. Okay, and obviously dollar supportive, which is obviously negative for the FTSE 100. The volatility index I've explained is on the verge of breaking out. So what happens with the FTSE 100? Let's start by deciphering here. Okay, so the FTSE 100 obviously failed. Well, has held a 61%, but this bounce is absolutely pathetic, really. If you were a bull and you've seen a move like this comparing to the DAX, for example, so just doing cross market analysis here. Now if we bring up a daily chart of the DAX, look at the actual move or the thrust higher. The DAX has broken out this bullish channel, is retesting that channel that it broke out of, and look at the candle. Okay, just looking at a 60-minute chart, let alone that, you can see you've had a move of almost from 11,800 to almost a 200-point move on the German DAX. Okay, it obviously is into resistance for now. I've broken out this channel, so into resistance for now. But the FTSE 100 very weak. It's an inside bar. It failed to even take out the high from the red candle bar on Friday. So this doesn't bode well. It's indicating that it obviously wants to move lower. So the next move you're looking at is around the 6,800, potentially 6,750, and even 6,700. Given the election uncertainty, you have an expanding wedge pattern, which generally indicates bearishness. Like I said again, it could be due to a rising dollar, which obviously hurts the commodities side of the equation. It could be due to the political uncertainty from an election, or alternatively from Europe. Okay, also the uncertainty over Yemen, etc., etc. There could be multiple reasons why the FTSE 100 is weak. From our perspective, all we're doing is we're assessing and studying price action. That's all we're attempting to do here. Okay, 60-minute chart of the FTSE 100. Again, as you can see, very feeble. Okay, at one time I did expect the inverted head and shoulders formation to play out, given the US markets were quite buoyant, and certainly that's not been the equation. As you can see here, we've even failed to hold a fib 75% resistance, which I'll explain to you on the 10-minute chart. So again, a very weak chart. Okay, a very weak chart. Like I said, it failed to take out the Friday's high. So 60-minute chart certainly is indicating resistance. Now a 10-minute chart, as you can see here, again resistance. We have broken out here, so a resistance level remains at 6,911, and then you have another level of resistance at 6,923, and then you've got the 200 MA at 6,914. So all these levels are certainly indicating and certainly referring to a resistance. Okay, so all these levels indicate and refer to resistance from a trading perspective. So watch out for the levels. 6,910 and 6,920 will be solid resistance on the FTSE 100. Obviously, if that plays out, then we are moving obviously higher, and we have to respect the market from that perspective. It has, I mean, it's just about managed to hold that 75% fib. So one could argue, if you are in the bullish camp, that is, given the fact that you've got the uncertainty in Greece, market overcomes that, the uncertainty Yemen, etc., market overcomes that, then one could argue you have an inverted head and shoulders. But the fact that the The UK market was very weak today, even in the face of a European market that was very, very bullish. It certainly is flagging a warning sign from my perspective. Okay, that's with regards to the FTSE 100, and also given the fact that oil certainly remains lackluster and remains weak, even with the Yemen situation, etc., etc. So certainly doesn't bode well going forward. From my perspective, especially given the fact that it's not playing catch up to the Dow, it still remains weak compared to the Dow Jones. So that's another factor that we're going to take into the equation, and we'll see exactly how the Asian markets react overnight. I can bring up a chart with Shanghai, that should be interesting. Okay, here we go. So looking at the chart with Shanghai, I mean the weekly chart is off the scale now. Even a monthly chart certainly seems off the scale at the moment. Let's just bring up a 5-year. Going back. Okay, that's all it's giving me at the moment. Go 10 years. Let's go to a quarterly chart, see if that's all it's giving me up to 2007, is it? Yep. Okay, 2007, that's all it's going back to. So the resistance is around the 550 level. We're at the 510 level. So, and one could argue, I mean, we could still thrust or continue to thrust higher from that perspective. It's only giving me a daily chart at the moment. Okay, so certainly no stopping the Shanghai at this very moment in time, but the FTSE, like I said, is lagging, and that's certainly a warning sign and certainly a sign to be concerned. Okay, I can quickly look at the FTSE 250 as well from the FTSE 100. Let's have a look here, again indicating resistance as soon as it's broken out this bullish channel, certainly indicating resistance. A daily chart of the FTSE 250 again is on the verge of breaking this trend line. It's not exactly a convincing bounce of that trend line, so certainly indicating a potential breakdown. Even with the sterling falling lower as well, still fails to propel higher. Again, it's a warning sign. We have held this double bottom, yes, we have to respect that for now, but given the fact that the sterling level falling and the FTSE failing to rally, all indicates weakness. Okay, certainly indicates weakness from my perspective. So we'll see exactly what tomorrow brings. Tomorrow is another day, and the situation certainly could be different, but for now it certainly is indicating a warning sign and indicating resistance from my perspective from the FTSE 100 and the FTSE 250. The FTSE all share as well, as you can see, lackluster, trading sideways, not very convincing. The FTSE AIM again as well, certainly lackluster, certainly failing to make a new high. It's consolidating with that bearish engulfing candle, so certainly isn't a good sign going forward. So given the fact that the Aussie and Kiwi were under pressure, obviously the Euro under pressure, all these indices under pressure, given the fact or currencies under pressure, the risk barometers that dictate or move with the FTSE are certainly showing weakness, and the dollar index certainly moving higher. The oil prices remaining low certainly indicates a risk off scenario for the FTSE 100 and is the weakest link in Europe right now. Okay folks, so risk on, risk off, wax on, wax off. Goodbye now.